Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good morning everyone, and Merry Christmas. Hope all is well. Good morning, and welcome to London Session Open. Let's go. Yes, I like the energy. All right, so let's get to it, guys. Today is December 22nd. We're going to go through the high impact news calendar, and then we'll go to the charts and see what happened. Today we woke up and found gold making new all-time highs, as well as silver. Silver is very close to the $70 mark. So let's get to it. Let's move to the high impact news calendar. We start with Monday, which is today. We have two numbers coming from, it's basically the same number coming from the UK, which is the GDP. We have the quarterly GDP and we have the yearly GDP. So the previous reading was 0.1% for the quarterly, and it's 1.3 for the yearly. Let me check real quick if we have a, what's it called? If we have a release. Yes, we do. So one second, because this calendar was prepared before the news. So yeah, we had we had the quarterly GDP. It came in at 0.1%, so as expected, or as the previous, the expectation was also 0.1. So yeah, it came in line with expectations, and the yearly came in line with expectations of 1.3% as well. So it came in line with expectations. So we didn't see much of a move on the GBP USD. Let's see for the day. Like for the daily, it broke Friday's high, and we're expected to see more upside because this number has already been released. So once we break 1.3460, we might see more upside on the GBP USD. So GDP is the growth number in UK, in Great Britain. It came in line with expectations, which is positive, which is like it's considered as growth because it's in the positive. If it came in line, if it came in, for example, minus 0.1% or minus 1% or whatever, it would have been negative, and it would mean contraction in the UK economy. But although the growth is not very dramatic, or it's not very big, but it's still growth. So that's why we saw the positive impact on the GBP. All right, let me see, how much did we move? Like we moved around 40 pips to the upside on GBP USD after this release. All right, then we have Tuesday, which is tomorrow. We have durable goods orders coming from the US. All the numbers on Tuesday are coming from the US. We have the previous reading at 3%. Let me check real quick if we have a forecast number, because this was prepared before. Yeah, so actually today they added one number to the calendar, which is the core PCE index coming from the US. So this is a key number. It's coming out at 7 p.m. Dubai time. Yeah. Let's see how that goes. The expected is 2.8%, or no, not the expected. The previous reading was 2.8%. So if it comes in anything lower than 2.8%, it means that inflation is cooling in the US and they have more room to cut rates. All right. As for durable goods orders, we're back to Tuesday. For durable goods orders, we have the previous reading at, that's 1 second. No, those numbers are wrong. The previous reading was 0.5%. The forecast is 0.2%. So if the actual comes in, it's expected to be negative for the US dollar. So if it comes in 0.2% or below, it's even like worse than the previous. So it might mean more negativity on the US dollar. As for the GDP coming from the US, the previous reading was 3.8%, which is very impressive. That's the quarterly GDP. The forecast is 3.2%. Okay, so that's like a slow down in growth. But if it comes in anything above 3.2%, it would be considered as positive, and we will see like some recovery on the US dollar. If not, if it comes in at 3.2 or less, we're going to see more downside on the US dollar. And finally, we have the consumer confidence coming from the US as well. It's expected to be better. So the previous was 88.7, and the forecast is 91.7, which means that the American consumer is more confident in the economy than the previous reading. So that's for the month of December. They're more confident than they were in November. So that would be positive for the US dollar, because it means that, or the economy in general, because it means that the US or the American consumer is is confident in the economy and is spending. They're not saving money aside. They're actually confident in the economy, so they will keep spending and investing in the stock market and so on. Okay, so that's for Tuesday. Then we have new home sales. The previous reading was 800,000. We don't have a forecast number yet, but if it comes in anything above 800,000, that would be a positive indicator for the economy. It means that people are buying new homes. It means that they're confident in the economy and in the real estate sector, to be specific. All right, so that's for Tuesday. Wednesday, we have very limited numbers. We have durable goods orders. No, that's okay. Now, because it's the Christmas week, things get like shuffled up a little bit. So what happened here is that they moved PCE to Tuesday and brought durable goods orders to Wednesday. So we will have durable goods orders on Tuesday, not Wednesday. So this one we already discussed. We have only the initial jobless claims and the crude oil inventories from the US. So the initial jobless claims, the previous reading was 224,000 jobless claims. The expectation or the forecast is 220,000. So less people are claiming or are expected to be claiming to be jobless in the US. So that's a positive thing for the jobs market. If it comes in higher than 220 or 224, it means that the jobs market is struggling and they will need to cut rates as soon as possible to boost the jobs market. Okay. As for the crude oil inventories, we still don't have a forecast number. We only have the previous number, which was minus 1.274 million barrels. So a shortage. If the actual comes in like as a deeper shortage, it would be positive for oil prices, because it means that demand is outpacing supply, and vice versa. If it comes in like as a surplus, for example, plus 2 million or plus 1 million, it would mean that supply is outpacing demand, which would be negative for crude oil prices. All right. Not only the crude oil prices itself, but also the the energy sector stocks. Okay. So that's pretty much it for this week, because it's Christmas. Again, for those of you who just joined, Merry Christmas. That will be like a very short week. On December 24th, which is this day, we're going to have an early close. And on Thursday, it will be a full day off in the markets. The markets will be closed. for Christmas, and we will keep like um, having like shorter days as the end of year approaches. So as I always say, like for the past 3 4 lives I went on, liquidity is becoming thinner, and that's a perfect environment for stop loss hunting. So please make sure to manage risk and avoid trading as much as possible during high impact news times. Okay, let me check if you have any questions before we move to the charts. And yes, then what would, if people buy homes with Bitcoin in the US, then what would be the impact? Um, that's like, what do you mean? Like, it's just, um, I didn't understand your question, because Bitcoin is also money. So they will have to sell Bitcoin to buy something else, right? Like, you're exchanging a house for Bitcoin. So if the seller is okay with receiving Bitcoin, that would know on US dollar. Ah, you mean what would be the impact on US dollar since it's left out of the equation? Um, you know what? Actually, that's an interesting question, because if you buy a house with Bitcoin, it means that you left the US dollar out of the equation, which means that the demand for US dollar is getting lower. So it might, like, you don't need dollars to buy a house, you would buy with Bitcoin. Um, but that's just a theory. We're just talking theory. It means that you don't need US dollars now, so the demand on US dollar goes down, so the price of US dollar goes down. But in reality, that's not what happens, because Bitcoin is not an official way of payment yet. So that's why, like, I answered your theory with a theory, but in reality, that's not what happens. What happens is, um, Bitcoin is not yet an official way of paying. So it's not like a conventional payment method, but it could happen if the seller, for example, um, agrees to receive Bitcoin for the house. That's on him. But will it be counted in the new home sales? Yes, because they count the number of new home sales that are added on each month. So yeah, it would impact this number. But if you see, like, houses are getting bought or are getting sold, and the demand for the US dollar is not changing, you might see some discrepancy, and you might see lower demand on the US dollar, which would bring it down. I hope I answered your question. Let me check. What else do we have? Good morning to you too. Yep, that's it. So now I think it's time to move to the charts. 1 second. And my screen share. We go to the charts now. There it is. I'm sorry, guys. I think I'm getting sick. That's why my voice is a little bit off. Okay. So as always, we start with the DXY. It's been like trending lower for the past 3 4 weeks. We have lower highs, lower lows. On Friday, it closed above 98.6, which might mean that we might be heading towards 99 again before continuing the downtrend. I'm talking about this downtrend, okay, here. Yeah, we might see some positivity on the DXY this week, like temporary positivity, or we might just keep going down from here. So it's either we reach this point, which is 99, and then continue dropping, or continue dropping from here. So either way, we're expecting to see a drop in US dollar this week. Okay, it's still within, like, as I told you, lower lows, lower highs. So we now know that the DXY is getting weaker and weaker. So we know we have a weak DXY for this week. yeah, that's a very clean downtrend. So now time to move to the next one, which is the Euro USD. It should be the exact opposite. Yeah, we had like a rejection on Friday, so we might be reaching towards 1.1650, which was a resistance at some point. Now it became, or now it becomes a support. So yeah, that's for the weekly. So the exact same thing. We have an uptrend. So it's either we reach 1.1650. It's the exact opposite of the XY. So either we reach 1.1650 before continuing the uptrend, or we continue going up from here. So it depends on the momentum of the US dollar, and it depends on the momentum of the euro. Okay, but as we saw on the DXY, it's trending up, higher highs, higher lows. Nothing shows us any kind of weakness for this week. We're talking this week. Okay, so that's it for euro. That was pretty simple actually. Let's see. Okay, so we start. We move to GBP USD, which is the cable. We've been trending upwards for well, like 1, 2, 3, 4, 5 weeks now. Like it got rejected from an important level, which was the 50-day moving average. It reversed this downtrend. So like now we have a small uptrend, like a medium term uptrend, and we went above and close above this trend line, which could mean that we will be targeting this area, which is 1.3630, and then with the 1.3740. Okay, so it's still going up. We might be like correcting downwards to reach. No, why 2 days? What's that? We might be correcting towards 1.3260 before continuing the upward move. Or we could just keep going up from here. Okay. Now, if we see it around 1.3260, that would be a good buy. That's 1.5 or like 150 pips to the downside. That would be good, with stops placed below previous lows. No, 1 second. I want the 4 hours, not the 1 hour. Yeah, so it's a clean uptrend. So okay, guys, let's connect everything together. We're expected to see weaker US dollar, or maybe like a slight upward move and then continuation to the downside. And we're expecting the exact opposite from Euro USD and GBP USD, which makes a lot of sense because they move opposite to each other. So yeah, that's what we have for DXY Euro and GBP USD. Now, what's interesting here is the USD JPY, because USD JPY, or the Bank of Japan, which is the central bank in Japan, raised interest rates by 25 basis points, which should have been positive for the JPY. Positive for the JPY, it means that we should have seen a drop in USD JPY, meaning like you will need it means that you get fewer JPYs for your US dollar. It means that JPY is strengthening if it goes down, but it did not do that. Actually, it did the exact opposite, which is like it went up 300 points. That's basically because like this was like a tactic of the Bank of Japan to support their currency. But I believe what really moved the market, as I always tell you guys, the market is forward looking, meaning that after they raised the 25 basis points, they said they were dovish. Like they didn't say that, yeah, this is just the start of more and more rate hikes. No, not really. They were dovish, so they said they're going to raise those 25 basis points and then wait and see the numbers that come from the economy. So they didn't actually give much hawkishness on the JPY. That's why we saw it go up instead of down. That's why context matters a lot. You could be raising rates, and if you don't listen and read between the lines, you might get the wrong message. So they raised rates. We should have sold USD JPY, but no, it went up. Why? Because context matters. All right. Watching from the Philippines. Hello, Philippines. What happened with XAU USD early trading hours? Most probably that's thin liquidity. Gold is super pumped today. Yeah, we'll move to gold now. Let's move to gold and see what's happening. Okay. So yeah, we have this. It closed bullish last week, and at the start of the session, it started going up aggressively. We went up like almost $80. 80, yeah, almost $80 we went up. Let's take a look here. We are at a new all-time high now. It's on an uptrend, and it's closing bullish every day, every week, every month. So I expect to see also like a bullish close for this month. Let me show you 1 second. Like if it closes like this above the previous all-time high, that's super bullish, and we might be targeting the 4,500, 4,700, and possibly 5,000 by like the end of Q1 2026. Okay, so gold is just going as expected. If it didn't break all-time highs, I would have expected a drop towards this area. But I think it's not going to happen. It's going to break all-time. It already broke all-time highs, and it's going to keep on breaking new all-time highs for the rest of the year. Let's look at lower time frames. Yeah, even the 4 hours is super bullish. Yeah, it's very bullish. Like it's above all moving averages, and it's above the bands. It's super bullish. Okay, so what else do we have? All right, let me just show you the silver, because silver is going crazy. So let me start by showing you how much silver went up this year alone. So that's January. Yeah, that's actually January 2025. Okay. It went up 137%, so almost 140% in 1 year. That makes it undeniably the best performing asset of 2025. That's something I very clearly said at the beginning of the year. I said this will be the black horse of 2025, which is silver. So now we see it going up and breaking new all-time highs. My highest target for silver, and I didn't expect it to reach here by now, to be honest. Like my ultimate target on silver is 78, so almost $9 away from here. But if that also gets broken, and if we keep moving with this momentum, we're going to see much higher prices than 78. I'm expecting $100 and maybe $150. There's something, guys, called the gold-silver ratio. It means how many ounces of silver does 1 ounce of gold buy you? Now, historically, there's been like an average. Okay, so now because gold went up pretty crazy in the past 2 years or 3 years, and silver didn't go much up in value, because if you look at the gold, it's $4,400 and the silver is almost $70. So although it went up 140% in this year, but the dollar value is not much. it just moved like $40. Okay, so $40 in comparison to $2,000 or whatever on gold, or even more. Like it went up almost $2,500. That's why the ratio is off now. If the average is going to go back to what it was, it means that silver needs to be around 150 or 200 per ounce. That's just the basic analysis. Okay. Silver beat gold. Yes, in terms of percentage points, yes, it did. It did beat gold because gold went up maybe 60 something percent this year, but silver went up 140. But in terms of dollar value, the gold, of course, went up much more than silver. All right. Let me check if you have any questions. No option for questions. I hope that's a good thing. You mean that I explained everything? Okay, let me check what's happening with platinum. Platinum went crazy because someone is asking about platinum. So since the beginning of the year, 1 second, which is here, platinum went 130%, 130%, which is slightly lower than silver, but it's also an impressive jump in platinum. Let's quickly look at US 100. US 100 got rejected from an important level here and closed bullish on the week last week. And for me, I'm expecting to see new all-time highs, especially we're approaching the Santa rally, which technically starts on Friday, this Friday, which will be 26th. So we have the last 5 trading days of 2025 and the first 2 trading days of 2026. We will most likely see the Santa rally, but stars are aligned for us to see a Santa rally this year. It happens like 70%, 75% of the time, but it doesn't need to happen. It's not a must that it should happen. Okay, so guys, do you have any questions? Do you have any questions? I'm going to give you a couple of minutes to ask if you have any questions. S&P 500 as well. You know, like Dow Jones already made all-time highs last week, or the week before, not last week. The week before, we reached almost 49,000. That's crazy. I remember trading Dow Jones around like the 16,000, the 18,000. Imagine now it's 49. That's crazy. Explained everything. You're welcome. You are welcome. When shall the normal trading days resume? Like, if you mean normal, it's after January 2nd. It's still dry. Some currency pairs can you give United to maintain profitability? Yeah, just like manage risk like super properly. Like this 2 weeks. Like we have 8 more days to go for the year, 8-9 days. So make sure to be very, very disciplined when it comes to risk management, because markets can mess up with your head now and take away all the profits that you made just because you don't understand what's happening. But in reality, what's happening is that it's thin liquidity, and few players or few whales can move the markets to their advantage and hunt stop losses. Okay, so that's my number 1 advice for this time of the year. Okay. All right, guys. So I think that is it for today. I hope you learned something. I hope this was helpful for your trading. Good luck trading this week. As I told you, be very careful trading this time of the year. Take care of yourselves, and I'll see you on the next one. Take care. Bye-bye.